Jollibee.
The Philippines' Jollibee, hailed as the best fried chicken chain in
Lunch is incredible.
Jollibee's financial statements must be prepared at the end of the company's tax year. Of course, there should be an overall requirements for financial statements, including how they should be structured, the minimum requirements for their content, and overriding concepts. Today, we will have a wonderful opportunity to see the insights how Jollibee will make their presentation of financial statements.
We are at the close of an accounting period, and as Jollibee's auditor, it is time to make the presentation of financial statements. Financial statements establish the general guidelines for financial statements, including the structure they should take, the minimum requirements for their information, and guiding principles like going concern, the accrual basis of accounting, and the distinction between current and non-current asset. The balance sheet, income statement, statement of cash flow, and statement of changes in equity are the four basic financial statements for profit entities. Before I begin writing the notes, I must make sure that they fit to the International Financial Reporting Standards standard requirement. This is significant because financial statements contain information on a company's income, expenses, profitability, and debt. Financial statements are crucial in helping Jollibee assess how well the business is positioned to succeed in the future. A statement of financial position, a statement of profit or loss and other comprehensive income, and a statement of cash flows are required as part of a complete set of financial statements according to the standard. After the financial statements requirements are complete, I then move on to make the overall feature, which is going concern, offsetting, accrual basis, consistency of presentation, and materiality and aggregation. Is it a bit confusing? Allow me to introduce the other auditors to further explain.
As an audit, it's my responsibility to feature going concern. What is going concern? Going concerns are notes that implies if the business will continue for a foreseeable future and thus give more realistic image of the business from a long-term view. For instance, the Jollibee is the entity, and the Jollibee is concerned about whether it can survive and pay off its loans. Based on the financial statements, I can audit that Jollibee owners do not intend to close the business, since Jollibee experienced a significant increase in its sales by 14.9% this year. Therefore, the company will continue to be present under that assumption. Depending on the seriousness of the downturn, Jollibee may disclose this as its financial statements.
Accounting principle can provide consistency in the development of Jollibee's statement of financial condition by setting standard and providing guidance for the auditor's assessment, including an adjustment to previously released financial statements. Alteration of accounting principle can have a major impact on the company's financial statements, whether it is a change in accounting principle or an adjustment to correct mispresentation. Auditor's report on financial statements affect how consistently they were reviewed. If an auditor reports the current period, they should assess in the financial statement or comparable to the previous period. When the auditors report on two or more periods, he should assess consistency on those periods with one another. The importance of presentation consistency in the business is that it keeps your audience on the same page by maintaining consistency not just in text but also in visuals. By building trust, consistency adds value and promotes better customer service, higher levels of customer satisfaction, and more confidence in achieving stability.
Reporting of frequency requires an entity to present a complete set of financial statements including comparative information at least annually. For Jollibee Food Corporation, they do annual reports of their financial statements. Normally, public companies prepares financial statements for their external reporting 4 times a year. Although since there's what we call an interim financial report and fiscal report, Jollibee Corporation has chosen to put out their financial report annually. Jollibee Corporation has 8 wholly owned brands, having a total of more than 5,000 stores worldwide, with Jollibee alone having 1,300 stores worldwide. It is not surprising that Jollibee Food Corporation is one of the most profitable company when it comes to food industries worldwide. On Jollibee financial report, JFC's system-wide sales grew by 14.9% to 243.79 billion. Revenues for the year rose by 11.4% to 179.64 billion compared to 2018 total assets. Main contributor of this is the acquisition of the coffee bean and tea leaf. Although despite of the rice wild sales, the listed fast food chain booked a 6.33 billion net income for the year, down to 14.4% from the 7.4 billion it made in 2018. In conclusion, Jollibee is seen to be more profitable in the near future despite of the ongoing crisis on the shortage of raw materials. Nevertheless, Jollibee continues to provide satisfaction to its loyal customers. Jollibee is also eyeing in acquiring more company and opening hundreds of stores as part of their goal being one of the top 5 restaurants in the world.
A comparative income statement showcases the operational results of the business for multiple accounting periods. It helps the business owner to compare the results of business operation over different periods of time. This analysis is supported by the increase in the advertisement expenses of the Jollibee for the year 2018. This increased by the 33%, which is much higher as against the increase in 2019, which is 24%. Thus, this entire scenario indicates that it was quite challenging to sell the goods during 2018. Hence, the Jollibee increased its advertisement cost significantly and reduced the selling price in order to achieve higher sales volume. Also, this scenario could be an outcome of a new product launch. In such a case, the Jollibee had to spend a huge amount on the advertisement and reduce the selling price for the market penetration.